Aloha, my deal makers. Thanks for joining.
But we got a great webinar for you guys today. Hard money lending is one of those subjects that we can't avoid in doing deals, guys. The money is important. And although money is cheap right now, it still makes a huge difference on who you work with. Now I have three Alexes here on the screen. It's a good looking dude. And I personally worked with Natalie, the special guest, you guys, and she's a rock star. She helps share with me all the tips and tricks of hard money lending, private money lending, and she has a vast network of investors that she works with. So, we got my man Will.
What's up, Mr. Camacho? How are you doing, sir?
Amazing, sir. Thank you. Will and Jay are so freaking busy out there hunting deals in LA that they that we had a little bit of a delay because of LA traffic. Let's go.
LA traffic is back, Alex. Man, we were out in Palmdale looking at a deal this morning. We were back down here in South LA this afternoon, and Jay and I will be home and in front of our computers in about a minute, but didn't want to miss anything and wanted to make sure we're here to join all the fun.
Absolutely. Thank you, Will. And as Will normally is the moderator at the beginning here, I'm going to go ahead and take over and just let you guys know, if you're new to the webinar, make sure that you're putting your information on the chat. Make sure that you're putting your Instagram, your email, phone numbers. So this is a community, guys. Obviously we want to collaborate, make sure that we're helping each other out. We don't know what you're up to unless you tell us. We don't know what you need unless you tell us. We don't know how to find you unless you tell us. So on that note, just make sure that you're putting your IG handles and all that good stuff in the chat. Let's see here. So is Nicole, Nicole, just to double check, you're going to be eventually promoting Natalie to a panelist, correct? Or when are we doing that?
Yeah, we'll get Natalie added in here, Alex. Before we do though, like you mentioned, we do want to make sure that everybody who is here for the first time, please do introduce yourself. That way we know who you are. More than anything here, we're about the vibe of the tribe and want to make sure that everybody in the tribe knows what's going on and, gets to meet everybody here. So we did have a really fun meetup this week on Monday. Alex was out here in Los Angeles for a grand total of 3 days. And Alex, why don't you tell everybody a little bit about the meetup and what we kind of thought of that?
Yeah, well, let me give a quick recap of the last 6-7 days, because our last webinar was amazing, right? We did the open house. We had people on screen with us. It was more of a meetup, networking, and I really enjoyed that. So I'm looking forward to doing that in the future on a monthly basis, where instead of us doing a full webinar, just teaching something or having a special guest, we're going to have you guys on the panelists, and we're all just going to network and collaborate and ask questions that are on your mind. So on that, just quick recap. In last week or so, I went to Vegas for 2.5 days. So I was there. The reason I went is because Ryan Pineda, who is currently my coach in this business, he throws a quarterly mastermind that's included inside of the coaching program. And I've gone to the last two and they've been amazing. I almost didn't go to this one, but I decided to go because there was a couple people from Hawaii that joined the program, and we kind of shared a space. And it was pretty cool to kind of be with my Hawaii people over there in in Vegas. And then Will got to come along as well because I was able to bring an additional person to the event. And just on that event, you guys, when I see somebody else that's just super focused, super locked in like Ryan is, it's really inspiring, because when you have extreme focus, great things happen. You know what you want, you're locked in all day long, you're executing, you're putting in the work that you need to, whether you love it or don't. You're just getting the things done. And I see that with him day in and day out by being, in his program. So I just want to share that, how important that is. And then also seeing his operation from the inside out was amazing, because you get to see the people that are putting in the work, the people that are working on the systems, everybody that has a role in his organization, and it's very well defined. And so we're constantly working on our business to be that same way, right? Where everybody has their role defined and is doing their highest and best use of their time. So that was great to see. And another reminder that I saw with him and his organization, you guys, is sales. Sales is the lifeblood of this business. If you are not a great closer, a great salesperson, then someone on your team needs to be. Otherwise, how are you going to get deals? How are you going to influence sellers and wholesalers and real estate agents to consider your offers that you're making, guys. So just make sure that you are studying sales, because it is extremely important skill set, and someone on your team needs to possess it. Otherwise, you're not going to get deal flow. You're not going to have consistent deals. Anybody can get a flip here and there, but only real successful sales teams can consistently get great deals. So I think that was important. And then also just knowing personality types, you guys, is super, super important. They're big on that over there at Ryan's companies, and we've been big on it as well. Just doing these personality tests so that we can understand each other as teammates, how we think, how we operate, what are our natural skills. That's also extremely important, because that makes up a great team. When you have, you have great skills on everybody, but they're complementary, and nobody's like overlapping too much, where we have too much duplication, where this person is great at this and this person is also great at that, but then what about the other things that are needed in the business? So I think that was important. And then just the tremendous value that you get when you're around other like-minded individuals, investors, and those side conversations that are really open, because in the context of that conversation, you're at a mastermind, you're at an event, you've all paid some money to be there, or at least paid to be in the program, and then there's no big egos or anything. It's just like, hey, everybody just talking and having real conversations, and those are extremely valuable conversations, because all you need is that one or two little nuggets to help your business or help your mindset, and it just propels you forward. And I've seen that a lot this past event at the mastermind, where I had several conversations where afterwards I was like on my phone just writing down notes, so I don't forget this valuable information that I'm getting, or these golden nuggets from these other high level entrepreneurs. And then these are also, when you go to these events, you're potentially meeting connections and friendships, you guys, that could last a lifetime. How valuable is a relationship that you're going to have for many, many years ahead? And people are only thinking about, oh, I got to spend this money, but the connections you're making are, and they also are though, how much you put into it. So as you guys know, I'm very passionate, and I put a lot into these relationships, because I believe in people that are taking action. So I really like to align myself with as many people like that as possible. And I noticed that in growth over there at that mastermind, because there's just so many go-getters. So I think that's another valuable point. And then I don't want to go on forever, but then I spent 2.5 days in LA. Usually I have to fly through LA to go to Vegas anyway. So I just stop in, see the team. We had that meetup. Unfortunately, I didn't get to meet everybody that I want to. I'm only there 2.5 days, but the great thing about that, we got to do the meetup, which really, without the team, Will, Jay, Laura, Giuseppe, all these people that are on my LA team, all these people helped put this together and made it a blast. I just showed up. So I just thank you guys so much. Great job, Will. Great job, Jay, and everybody else that put that meetup together, because it was amazing. We made some deep connections there. I'm super happy to have met a lot of you in person. And then obviously I miss my family. I also got a chance to go on this yacht in the Marina Del Rey. My brother's in the kind of the boating industry, has a couple small boats, and he has access to yachts. So that was super fun. I'm actually thinking about doing an event on a yacht sometime in the next 2-3 months. So keep an eye out for that. It is going to be exclusive. It is going to be something where you need to pay some money, but we're going to really deck it out, and you're going to be a 100-foot yacht in Marina Del Rey. I think there'll be people that are interested. We'll do a poll on that maybe next week. And then that's it, guys. I'm back in Maui. I brought my family. We flipped this mobile home in Lake Isabella, which is by Bakersfield. And it was a mobile home that was in an older folks community. So you had to be 55 years or older to actually buy that property. And so my parents are 55 years and older. I bought in their name. And I told them, as soon as we flip the property, we're going to take a family vacation. We flipped the property, made close to $30,000 profit. And now we're doing an amazing family vacation, and they're here with me for a week. So I'm super excited to be able to share the paradise with them, and happy for them. But that's my recap of last week, you guys. A little bit lengthy, but I just want to share that with you. A lot of fun things happening right now.
And guys, I'll just echo that. Again, I got the privilege of going out there with Alex, and getting to go out and go to that Ryan Pineda mastermind. And two just quick hitter takeaways for me is number one, what Alex mentioned already, networking and the power of networking and the importance of networking. So this was the second mastermind that I got to go to. And like Alex said, the first one 4 months back, when I was out here this time, I now had those lifetime friends. I had people that came up to me and were like, Will, I've been following you since we met last month. Like, I'm impressed with what you've been doing, with where you're going. And it's really cool to see that. And so again, seeing everybody out at that networking meetup that we had this past week, really, really fun to see how many people are taking that networking to the next level. And then the second takeaway that I wanted to share with you guys is how quickly things can change. So there were people in this mastermind 3 months ago that were struggling, that were trying to get the tires going, that were still trying to figure out X and Y and what to do. And in the 3 months that passed, some of these guys have taken down 5 or 6 deals, have made 6 figures of income, and are just absolutely crushing it. And so again, it's how quickly things can change when you take massive action. So those are my 2 kind of key takeaways that I wanted to share from there. And I know we have Jay in the building now too as well. So Nicole, if you can promote her up into a panelist, that would be great. And we'll go ahead and get some things kicked off and started here, Alex, with some questions for you. All right.
Let's go.
Like Alex mentioned, guys, we're talking hard money today. So our first question that we have coming in is, Alex, somebody's wondering, how are you funding your flips currently? Are you using hard money? Do you have any recommendations for lenders? And what are some of the current rates that you're seeing right now out there?
Yes. So currently we are using hard money primarily, but with a combination of private money as well. So we typically will get 80% or something close to that 85% of the purchase price of the property from a hard money lender. And usually those rates vary. Right now I'm hovering around 8% with about 1 to 1.25 points typically. And then depends on the deal, because also since we do invest and buy property in Palmdale, Lancaster, rates are a little bit higher there because the loan amounts are less. So just want to make that point. But money is relatively cheap, but you do need to work with the right people. But that's what we're typically paying. And then for private money, it depends if they are funding the whole property. Then we're usually just doing like a flat, 9-10% with them, and then no points on if they're funding the whole deal. If there are a second mortgage, then they're typically we're typically paying between 10 and 12%. Also no points for private money for second mortgages as well. So we do a combination, bit of a hybrid.
Nice, Alex. I know a lot of people are going to be appreciative when we bring Natalie on, and we'll kind of dive a little bit more into the hard money. In the meantime, Alex, if you don't mind, could you just go ahead and click the 3 little dots up right next to my name and drop me down and make me the host? And then we'll go ahead and dive right into this next question here. And this is, more related to when you are actually acquiring your properties, Alex. How does that work? Like, are you mainly using private money lenders, hard money lenders, a combination of both? And how does that kind of work?
Well, I also want to state that since we're doing multiple projects at once, it does depend. Sometimes we'll do the hard money loan. Sometimes we'll do private money, because it just depends on the purchase price and the return and the project itself. So I think that's also a caveat or something I want to be clear about. People seem to think that they're going to fund their deals like all the same way, when there's usually somewhat of a hybrid until you get to a certain level. And then you have those big, maybe those big fishes of private money that will allow you to fund your business or fund your deals 100%. And then they really kind of bought in. That's the end all, that's the end goal, right? Where you have a couple of successful high net worth individuals that are funding all the purchase price, all the rehab, and then you're just paying them when you sell the property, all the interest, and you're not making payments monthly, and then you're not paying any points either for the money. So that's kind of like the high level that like Ryan Pineda and those people are at. And then but when you're first starting out, you're typically going to do like hard money. And then the private money I found that it's a little bit harder to raise private money if you have no track record. But when you go to basically, refinance out of that loan, then yes, typically what we're doing is we're refinancing out of that hard money or private money loan. And then we're getting a conventional loan through usually a mortgage broker. That's usually the kind of when we refinance what we do.
All right. And Alex, before we go to that next question, do you mind just explaining what a mortgage broker is for people here in the audience that aren't really as sure of what that means? Like, we know what a real estate broker is, a realtor broker, but what does a mortgage broker look like? How does that work?
Yeah, well, mortgage brokers have access to a variety of lenders, and they'll basically shop your particular application around to get you the best rate. So they are, middlemen, but at the same time, not everybody can usually go to their bank and go to a Wells Fargo, go to a Bank of America and get a first mortgage loan at the lowest rates possible. and then jump through all those hoops. Now, there is plenty of people that do that, and you can do that. But I have found that the mortgage brokers are helpful because they're helping guide you through the whole thing. And then they're not limited to just one bank, because one other bank might see your profile or your borrower application differently compared to another one that has maybe more stricter guidelines. So, somebody that's a mortgage broker is worth their weight for sure if they're good at what they're doing. And we fortunately have someone on our team that's a fantastic mortgage broker, and I do recommend them. But if you can get a bank at a traditional, get a loan at a traditional bank, go right ahead and do it. But there are other options out there as well that could potentially be better for you as well. Yeah.
Yeah, great. And we do definitely use a mortgage broker, Moises, that does our flips and all of that. So hello, everyone. Happy Wednesday. A little late to it. Our next question is, as a new investor, would he use his own money, private or hard money lenders? Which one would you recommend? Well,
usually as a new investor, you should be using your own money if you have it. But I do recommend that if you can, get leverage, because sometimes maybe you have plenty of cash and you could use a little bit more. But I tend to lean on the side of, if the money's, pretty cheap, keeping a little bit more capital. For example, if you have a deal that maybe requires like 150,000 and you have, a lot more than that, then maybe you leverage a little bit and then don't buy a cash, and then it helps you in case you maybe have another deal come up. So I think as a new investor, really, it depends on the deal, but I don't see why you wouldn't use your own money. Private money and hard money, will help you leverage. But again, it's not easy just to get a bunch of people that are your friends or family to lend you money either, if you have no track record.
Yes, and with that note, we actually have our special guest today, Natalie Bueno. We will be bringing her in shortly. She is a hard money lender, and we're happy to have her here. Again, you guys, if you have questions, feel free to ask them in the Q&A. We'll be answering them at the end. Also, we got one from Corey Rory on the refi. Do you need to do that in a personal name, or that can be done under an LLC? We'll actually get to that in a little bit. That's a great question. Actually having a little bit of technical difficulty. She will be joining in just a few moments.
Okay,
so we can.
Yeah, let me introduce her then, because Natalie's someone that I'm very fond of. She's somebody that I've worked with on several flip deals, including a property that was my primary residence as well. And so she really came through clutch on several transactions. So I'd asked her to come in to the conversation and to be a guest. So she basically started her career like in 2007. She was like an escrow assistant, just scanning documents for foreclosures and for the whole market crash at that time. She also worked like in corporate finance, and she's graduated from California State University, Fullerton. She's been working basically now in some form or fashion finance for about 15 years. And now she really focuses on helping investors, new like investors and seasoned investors, just have the best investment approach and focus on the exit strategy of the deal. She really asks a lot of questions to make sure that she's helping you kind of structure the deal that makes the most sense for you as an investor. I first was introduced to Natalie through one of my joint venture partners. At the time, we had been using another hard money lender, and we were both dissatisfied. We did not like the guy that we were working with, just was bad service, bad rates. So we were considering other options. Natalie came into the mix, and then we tried her out on the deal. She was able to come through, but just not only funding the deal, but it was really her service, her constant follow-up, her just professionalism. I also felt whenever I had a conversation with her, she was always sharing golden nuggets about what's going on in investing, deals and financing deals. So I felt like I would learn something from talking with her on a regular basis about what was happening in the market. And that's a super valuable when you think about that, because if a hard money lender is helping you be educated and help you see what's going on, they're helping your business out other than just getting the deal done. They're also helping you make better decisions on what type of deals to do and whatnot. So I just can't say enough good things about her. How's the technical difficulties? Are we got that figured out yet?
We're still working on it.
Okay. So maybe we could go on to the next question then, or if there's any questions in the chat, I'm happy to answer those.
Sure. All right. We have one here from John Chevalos. He says the hard money lenders he's talked to require an LLC. Would it be a good idea to create the LLC to borrow from hard money lenders and also build business credit on that LLC?
Sorry, can you repeat the question? As these technical difficulties, people are texting me and I'm trying to figure things out, but.
Oh, no worries. John Chavalos, he says the hard money lenders he's talked to require an LLC. Would it be a good idea to create the LLC to borrow from hard money lenders and also build his business credit line on that LLC?
Yes, that's a great question. I would definitely recommend that, setting up your LLC. You don't need to do it to buy deals, but then there are some lenders, because it's an investment deal, they want to make sure it's like they're lending to a business entity. So setting up your LLC might be a prerequisite for working with that lender. But so yes, I think that's a great idea if you are looking to do deals and you're you're committed, because if you're forming the LLC, usually there's cost for that. So I'm just not a fan of doing that if you haven't. There's no reason for you to do that. Like, there's no revenue coming in. You're already spending money on the LLC. I just want to make sure that you are going to get a deal done. And then I've started building business credit under my LLC, and that's been very helpful because then eventually that doesn't appear on your personal credit. And then you can start building these business lines of credit and help scale your business, but without affecting your personal situation in case something didn't work out with the business. So I'm a huge fan of that. Yeah, that's a great question.
Correct. Yes. And then also we got one from an Amari. Hello, Amari. He says, will an hard money lender be willing to use his equity in his home as collateral instead of cash? He said he can show proof of funds for the rehab.
Proof of funds for the rehab? Why would you need to submit proof of funds just for a rehab, though?
I'm not quite sure. Hold on, sorry. He said, Amari, yeah, if you could specify a little bit more. He said, hard money lender be willing to use his equity in his home. He says, and then he can show his proof of funds for the rehab.
Oh, okay, yeah. So let's clarify the question. So what happens is when you're potentially doing an investment deal, and if you're not going to be borrowing the money to do the rehab from the lender, then they want to see that you have the money so you can finish the deal. I mean, the lender doesn't want to have to foreclose on you, but they want to make sure that you can finish that project. And so that's, I guess, the question. They want to know, where's the money coming from? So yeah, they will vet funds for the rehab. And so that's an important question. You need to have that somewhere, and either in some account, or like he's saying, if he has an open equity line of credit in his property and it shows that it has $100,000 available, then that would prove to the lender, hey, I can successfully rehab this property. Yeah.
Awesome. There we go. Hopefully I answered Amari. And we have Natalie here. Perfect. Welcome, Natalie. Figure out the...
Hi, everybody. Sounds like we had some tech difficulties, but I'm logged in. And yeah, here in sunny SoCal. So I appreciate all the kind words, Alex. I know we've had quite a few talks. In fact, I was just reminiscing myself when we first met. Alex was like, what? We have to get this loan closed like in one day. He was so on it, so efficient. And I was like, hey, the wholesaler who sent over this deal chose an escrow in Vegas. All right. So we have to go basically off their timeline. If they're going to choose things, then we kind of have to all just go with the flow. Right. And that's really my tempo. If Alex knows, I'm always easygoing. I'm always go with the flow. And I think that's what makes, a transaction very smooth, and people want to work with us because we're always going to kind of go wherever the tempo needs to lead us. Yeah, so appreciate it.
Yeah, you got it, Natalie. It's been a pleasure working with you. So we have some, as you know, we have some questions that the listeners and the attendees have. And so we're going to go through those, right? Who's next, Jay or Will?
Yeah, and there's some pretty specific questions in here, Natalie. So, the first question I'd love to kind of jump in, and this is from one of our listeners. And I think it really applies for a lot of people. When you talk about analysis paralysis, and sometimes people kind of talking themselves out of a deal, do you need an LLC to get a loan approved, or is it possible to put it in a personal name and then deed it to an LLC? What's the deal with the LLC for a hard money loan?
So I am not a tax specialist by any means. However, from my understanding and what I've spoken to with tax specialists and seasoned investors, is the LLC is really there as a protection. Okay. It's really there to protect you as an investor. If a contractor that you 1099 trips and falls on your project, Are they going to sue, you know, Natalie Bueno, or are they going to sue Bueno and Company, right? So there's a big difference with that. It's also how you file your taxes, right? So I highly recommend that you always speak to your tax preparer or you know, research it on your own terms. But no, it is not required on our side. In fact, a lot of what we do is we're very hybrid ourselves, right? As Alex mentioned, I've been doing this for, well, I can't even believe it when I wrote the numbers and I submitted it to you guys, 15 years in the industry. And what I can tell you is that every approach, Alex is 100% spot on with every deal is going to be different. I've had clients that are like, oh, I need a vest in the trust on this one. I need a vest in the incorporation. So, or the LLC. But yes, it's very common for LLCs, but it's not required.
And I know we just wanted to kind of get that question out of the way, because that's kind of like the big question that everybody wonders is what can I do to get a hard money loan? What's the quickest way to get there? And a lot of times people think that LLC is a real you know, trigger, but really, like you said, that's more of a tax thing than a loan thing. So I think people really do appreciate that. And what we'd love to do, Natalie, now, if you don't mind.
Sorry, real quick, little piece of advice, by the way, for people that do, I just thought about this, but little piece of advice of what I've taught many clients over the years. DBA is a very good way to get started, which is a fictitious business name. It's also a lot less expensive. So that is a great way to get started on your first project if you are kind of in between holding it in your personal name or an LLC.
Love that. And you know, doing business as instead of getting the LLC, definitely an easy way to kind of get around that. So Natalie, if you don't mind, what we'd love to do now is, that was a great tip. Do you mind just kind of going into, you know, a freestyle real quick for maybe 5 or so minutes, 10 minutes, and just kind of give everybody in the room a quick rundown on what hard money lending is, what you guys are kind of specifically looking for, and just kind of give us I know Alex did a tremendous introduction of you, but if you don't mind just kind of giving us a quick rundown of again, like, what does that hard money process look like from beginning to end? We know we don't necessarily need the LLC, but what is that kind of, what do those next steps look like for people?
Absolutely. So number one, the most important part is finding a good deal, guys. It's the hardest part. Alex always brings really valuable deals. And you know what I love about his approach is he'll tell me, this one's a skinny one. This one's more meat on the bone, right? We have our different nicknames in the industry as you get more seasoned with each investment approach. But, you know, basically there's going to be the singles, right? The doubles, the triples, and then the home runs, as I like to call it. I do baseball analogy. And so basically, you know, everyone's always looking for the grand slam, the home run, right? They're always looking for that. I'm going to buy it under 500,000 and I'm going to sell it for $1 million. Well, we would all love that deal, right? But it's hard to find. So it's okay. If you can find a bunch of singles and doubles, then we're still going to take it, guys. But just know that when it's a skinnier deal, an investor is also going to look at that as, I don't want to leverage too much on a skinnier deal, right? So I might pull back from where I was at 90% financing on the acquisition. Maybe I'll be at 80%, maybe even 75, right? But if it makes sense for you financially, and I have a spreadsheet, by the way, which I'm happy to share, that just basically goes over some basic numbers. I'm sure Alex has a spreadsheet. Everybody has, you know, when you become an investor, that's what I recommend, is that you do a spreadsheet of some sort, and where you look at it from a worst case scenario. If you can still make a little bit of money on that, then that's a good deal, right? If it's worst case scenario and you're losing a lot of money, it's probably not something you want to approach overall.
Yeah,
and guys,
can I add a little bit to that, guys?
Please.
That was so awesome, because it's true. What people don't understand is that they're going to look at that deal as well. And if it's a meatier deal, it's easier to get funding for it. If it's a skinny deal, then it's going to be harder to get funding on. So, but what she said is exactly what I do when I analyze my deals. Worst case scenario, you know, if I'm going to lose $5,000-$10,000, I'm okay with that, because I have that comfort level that I'm pretty sure that all things are not going to go that bad. But I do have that in my mind. If it's going to lose more than $5,000-$10,000, worst case scenario, like $50,000, I lose 50,000, then I'm not going to do that deal. I don't care, how much upside it is. What you want something with low risk, high upside potential. And sometimes those base hits are the deals that you really kind of prove that, hey, you know what? We thought we were going to make X amount of dollars. We made a little bit less, but we didn't lose money. And then it gives you confidence for the next deal. And then also that now you have that track record that you executed that deal. So too many times these new investors want this like grand slam, no brainer deal to start. And it's hard enough as a seasoned investor like myself to find those deals on a regular basis, let alone somebody that's never done a deal. So I think you guys need to have more realistic expectations, but also know your numbers as well. So that way you're like, hey, worst case scenario, I lose a couple bucks, but I gain a lot of experience. Best case scenario, I make this much more. This is a good deal. And I love that kind of benchmark or guideline that you just gave, Natalie, because I do the same thing.
Yep, absolutely. You're one of my seasoned clients that has a full on, I mean, this spreadsheet's probably one of the better ones I've seen personally, but there's a lot of clients of mine that are very similar, and they analyze the deal, basically on their platform, how much they have to pay the real estate agent. I mean, it's not just the lender fees, guys. There's a lot of other fees that you have to factor in as well. You have to factor in, what if it starts raining, right? If my contractor is going to be delayed by a month. Is the city permit going to delay me, right? All these little things that may come into play, you kind of always have to have reserves just in case. And again, if it doesn't fit the criteria and you're like, I think I could lose up to 50,000, probably go with your gut feeling, look for another opportunity. I promise there's always an opportunity out there.
Yeah. And Alex, we talk about this calculator all the time. So guys, if you have not seen Alex's Dealmaker calculator that we're looking at right now on the screen, it is in the Facebook group. You just have to go over to files and you can find a copy of this as well. And like Alex and Natalie are saying, we typically analyze our deals where our worst case scenario is we lose or make just a couple $1,000s. We don't mind if we're going to lose $2,000 if it's going to be a base hit over here, but over here, it has that chance of really kind of blowing up. And that's where we're like, hey, you know what? I don't mind if we get into this deal and we only make 2K because we think it's going to be further up towards that best case or base case scenario. And so again, guys, the copy of that calculator is available for you guys on the Facebook group if you do need a copy of it. Natalie, again, I love what you said there, and let's take it to the next step. So we have a deal. Let's say that we've identified a deal, we have some meat on the bone. What is our next step? What's the next thing that we would need to do if we were looking to get a hard money loan?
Absolutely. So number one is identifying the opportunity right at hand. Number two, I always tell Alex this, I always tell every client this, when they send me an address, I already know it's, hey, this is an opportunity. Sometimes I don't even get a hello or whatever. My clients will just send address, right? And I'm like, okay, it's a deal. And that's great. I love that, we're at that level with a variety of my clients here. But what I always need is the rehab, the estimate. Okay. I don't need a full breakdown just yet. But what I need is a rehab an estimate of what you think it's going to cost to repair the home. And then where you think conservatively, guys, I use that word so often. Alex is used to hearing me say that. I'm like, what's the conservative resale value? Because it's super important. If you guys are looking at it from a conservative standpoint, imagine where my investors look at it from, right? So I'm kind of like the hybrid in between, the middle person between the investor and Alex, right? Or the investor and another borrower or a first-time investor, right? And so basically, I always have to go back to them and present it to them and make sure that they're okay with it. Because I get a chance where I work with direct investors as well, or I'm working with, basically hard money banks in a sense, right? They're small family funds, little banks that specialize in, stated income, things of that sort. So what they're always going to look at it is from a risk approach, and they want to make sure that, okay, does the math line up?
Okay. And not to backtrack, you guys, something that we always say is if you're able to find the deal, we can definitely fund it. With the market going as hot as it is right now, like you can send it to us. If you've never done a hard money lender or something before, you can definitely send it to us and we'd be happy to fund it. So right now it's getting the deals. And then when you have enough meat on the bone, like everyone says, people are going to be wanting to get that return on investment, which is that ROI. return like 50% more with that said. So definitely finding the deals is most important.
And I think Alex and his team do a really great job, a strategy of finding opportunities. Like I said, I think it's great because most of my seasoned clients are hitting base hits, doubles, and that's where they know, that's volume, right? They're not always out there. But I do have a few clients where they're only like, I only want a triple or a home run. And we only see like maybe 3 deals a year, if that, from them, right? Even the most seasoned clients. So so basically, if you're okay with making a skinnier deal, a skinnier return, and maybe it's 25, maybe it's 50,000. I'm not sure what that is, in terms of numbers for as individuals or teams, but that's where I see really heavy volume from a client.
I also have a question for you. Kind of, I know we're talking about specifics here, but a lot of lenders promote that they can fund, a certain amount of the purchase or acquisitions of the deal. And then a lot of do also promote that they're going to fund the rehab. Now, what do you see happening as far as investors, and are they using that option often? I know for myself and my business model, that doesn't work that well because I don't like the additional inspections from the hard money lender. What are you seeing out there, and as far as like other investors and how they're treating that with rehabbing property and the loan from the hard money lender?
So I think what I'm seeing more is because the rates did drop a little bit on our side, at least on the hard money side. So basically, just a quick analysis real quick. Rates are really low right now, at least on the traditional mortgage side, right? And because of that, some of the hard money lenders that sell their loans to Wall Street, they actually lowered their rates too. So that's why Alex quoted in the beginning, 6, 7, 8%. If you had asked him this 2 years ago, it would have been 9, 10, 11% very easily, right? So our rates have dropped, at least on the hard money side, because of the low interest rates from the Federal Reserve. So because of that, I am seeing people take advantage. Even my seasoned clients, they're taking advantage of the rehab right now because they are getting it for much less expensive than they normally do. But it is a pain. And then I have other clients that are like, I have family that's in the business as well and on the investment side. And they're like, heck no, I don't want anyone to come out here and tell me when I can get an inspection and how much I'm going to get and this and that. It's a pain for them. They're like, I don't have receipts. Like, I just send my guys out there. We pull our permits, we do our thing, and I don't want to be bothered. I just want to get in, get out, and sell the thing, right? So I have a variety of different clients that are like super disorganized and don't want to deal with it. And then I have a variety of clients or just super quick, right? And then I have a variety of clients that are very organized, very detailed, or again, they do the math on their side and they're like, borrowing this cheap money at 8%, why not, right? If it's a heavier fix and flip, especially where they're doing add-ons, that's where I'm seeing specifically my clients that are taking advantage of the money, but closer to $100,000 to $150,000 in borrowing rehab funds, for sure.
Great, thank you. What else, guys?
Yeah, so Natalie, again, we started off with okay, we have a deal. We're now progressing to calling a hard money lender and saying, hey, we're ready to go. How do you pick the right hard money lender? How do you know whether that hard money lender is giving you the good rates, the good numbers? Like, how do you go about that if you're a first time deal maker and you've never been to that process before?
Sure, no problem. I think that's why I do well in my business, is because I kind of do that research for you guys. Alex and I have chats all the time where he's like, well, I did meet this person and they're saying that they can do this and that. I'm like, and they're going to run your credit and they're going to order an appraisal, right? And it's going to be about 14 days. Do you have time? Do you have the credit score? And do you want to go that route where you're going to take a risk on the value? Because if not, he knows we've been able to finance in as little as 3 days, right? Where we have our direct investors. Like he mentioned, that's kind of the goal. People like to work with direct investors because there's a lot more flexibility. One of my partners that I've been working with for many years now, I mean, if he really likes a borrower, I mean, he's doing 100% overall, no payments, right? Same thing. And his rate's like 8%. But those are clients he really enjoys working with. He's seen them make their payments on time for quite a few deals, right? He's seen them profit from a deal. Is he going to do that on the first try? Probably not. Although I have, when I've explained like, hey, it's a really good part of Whittier, or it's a really good part Palmdale, really good part of Lancaster, right? Whatever area it may be, he might do it, right? He might go, okay, you know what, 85. Let's try it out, right? Maybe 90 on this one. I think we did 85 or 90% on La Mirada, right, Alex? Oh, you're muted. Sorry.
Sorry. Yeah, it's 85. I'm pretty sure we did 85.
Yeah. I mean, and that was the first time working with him, right? And it was like super easy going, no credit, no appraisal, no nothing. So it can be high leveraged in that sense where, 85 maybe for the seasoned guys are like, oh, no, I'm used to 90. Well, that's great. We can go up to 100% if it really makes sense. But I will tell you, even my most seasoned clients know that every deal is a case by case scenario. So, I mean, what might have been 100% financing on the last deal might be, even if they're like the best seasoned client ever, it might be 95. It might be 90, right? They might go down a little bit just because they feel like it's a little too much of a stretch.
So let me just add a little bit, because the question was, how do you pick hard money lender?
Oh, yes. So
yeah, go ahead.
Well, I was just going to say, for myself personally, guys, this is what I do. You guys cold call your seller leads and your potential wholesalers and deals and things of that sort. I cold call hard money lenders all the time. And I'm constantly looking at their licenses, especially if they're a licensed bank. And I'm constantly looking up to make sure that they're active and that there are no complaints and that there's no fraud. There are a lot of fake hard money lenders out there, guys. Do not be fooled, especially if they're sending you links and you haven't even gone over a deal before. I have seen it. I have had clients that have come to me. They're like, hey, they charged me like $850. I never got it back. I'm sorry. You should have done, number one, your research, or call me, right? Because I already have my vetted group. I know who can deliver and I know exactly what they're looking for. So if you guys have credit issues, I got my guys who will waive the credit. If you guys have value issues, if you're out of time, that's really, I look at it from like time, credit, value, right? Experience, because there are some people that they won't even work with you unless you've done 3 deals minimum, right? And then there's a couple of investors that are like, I will only work with LLCs or entities. So, that's my job. I have an entire spreadsheet, at least on my side, where that's where I've been doing this for the past like 6+ years. And I've just been adding each person. I'm like, we'll go up to 100%. Doesn't do appraisal. We'll do this. We'll don't that, and I know all their, what they will do and what they won't do. So I usually kind of have that memorized. So when I know you guys have a specific deal, I kind of already know who I'm going to recommend who to work with on it.
Yeah, for sure. And for my side of things, what I usually do is at the beginning, I let my partners that I was working with fund the deal and use their hard money lender. But as I stated in the introduction, that lender was just giving us really bad service and bad rates. I'm like, hey, man, you can give me some high rates, but not bad service as well. Right. And so I got a referral. That's how I met Natalie, the other hard money lender that I do use as well. I met him at a mastermind. He's actually the CEO of of the lender itself. And he's very credible. And he's within that tribe of the mastermind attendees. And so that's why I've been working with him. But that's because some deals, like we mentioned earlier, make a little bit more sense going this route and that route. So that comes with experience, but not, that's why someone like Natalie can shop deals around for you. Now, I know with Natalie, I know what I'm getting. When it comes to the other lender, is just they want a little bit more stuff, but then, they can at times provide a little bit better terms or rates. But to me, it's not all about terms or rates. It's just that I know that person in the back end that owns the company. And I know that something, happens, that he's going to make sure it's right. And I say the same thing with Natalie, right? Where the service is so important in a hard money loan, because think about this. And I've had this happen, you guys, where unlike having a contract for the deal itself with the seller or with the agent, if you're an investor, there's no contract with the lender. So they can back out literally at the last minute, and there's no real form of no way of recourse of you. So you have to be able to have a high level of trust in that person and that lender and that person that's doing the hard money, the private money, because if they back out, like you're kind of screwed, or you're going to have to scramble at the last minute to try to find another deal. And you're not going to probably pay the best rates because of course, now you're in a time crunch, or you're going to lose that deal, which could be a very profitable deal. So that's why we're having this webinar, because it's helping you share to the community that who you decide to fund your deals is important. Not only just to promote Natalie, but it's more than that. It's just for you to go around the right process to finding someone to help you fund deals, and understand that the people putting up the money and the money partners, or in whatever capacity they are, whether lender or broker or whatnot, that they're extremely important, and then they can make or break a deal. Yep.
And guys, you can tell that that Natalie, people are really resonating with what you're talking about right now. We're asking people to use the Q&A feature. And if you don't mind, we're going to just ask you a couple of real quick, just quick response questions. You don't need to go too elaborate, but Jay's just going to ask a couple of quick questions here to kind of follow up. And again, guys, use that Q&A feature. We're going to just kind of very quickly turn and burn on these and get as many of these hard money lender questions answered while we have such an incredible professional Natalie with us here. So Jay, let's get things started.
Okay, perfect. Who is the association or licensing board to look up hard money lender license numbers?
The DRE or the NMLS, and mostly DRE through each state too. So if you're not working in California specifically, you would need to look like in Texas for Texas, or.
And that means the Department of Real Estate, guys, DRE. Yeah.
Mm-hmm.
And that's a great one right into our next one from Bobby. So Bobby was wondering, do you fund in California, or do you have lenders who will lend nationwide as well?
So yes, I am partnered. Most of my direct investors that I have partnerships with are here based in California, and they are super picky when it comes to their properties. So I would say that they are LA, Orange, and Riverside County specific, just a heads up, as Alex knows. And then for the my bank partners, my hard money bank partners, we are through different states. I wouldn't say every state, but you can check in with me specifically on which states.
Great. And then Nathan asks, how heavily does a hard money lender weigh hard credit inquiries when deciding to lend to someone with good or average credit?
Great question. So basically, especially if you become a seasoned investor, and let's just say you did 1 to 2 deals per month, that means that your credit would actually be hit every single month, if not twice a month, right? So at least the partnerships that I have in place, we do soft pulls more so than we do hard inquiries. And then my direct guys don't even run credit at all. Everyone does run a background check. I will tell you that.
So we have another great question coming in. This one's anonymous, so we're asking for a friend here. What experience do you require for an investor to qualify with you?
There's no experience that's needed, at least on my side. So again, we look at the numbers, always coming from a numbers perspective and making sure that it makes sense. I've had first-time investors that get 90% on the first deal. It's like Vegas. It's pretty, very rare, right? But it does happen.
But you can land on black. You can hit it. You can win.
I actually had a client
really be in a row
that got 100% financing with closing costs included. He just happened to hit the jackpot on that deal.
Nice.
And I know that'll probably also, you're sort of following up on that question, the experience. Amari is wondering, what are your current points and rate right now? I would imagine that probably varies based on the experience of the investor. Is that fair to say?
Absolutely. For seasoned investors that are repeat clients, I mean, it can go down to a point, like Alex said. Sometimes, like, if it's a really great opportunity, there might be no points, right? It just is a fee that's paid, at the very end of the closing statement. It really depends. I would say 2% is very common, especially for people that are just getting started. And I really try to keep it competitive with everyone I work with, to keep it around 2%.
I don't want to overlook that point.
I don't want to just JV with somebody that has done more deals, right? Like if you want a lower rate, maybe just come to Alex and say, hey, Alex, I have this deal. Do you want to present this to your hard money lender and see if we can get your hard money rate, right?
Absolutely. You can go that route. Or if you have really good credit, I mean, there's, like Alex said, if you can go to a Chase and you can go get yourself, you have your tax returns. I always tell my clients, as much as I love to take a deal, if they fit the Chase bank requirement, hey, go to Chase and go get that financing for your first buy and hold, right? and then
Yeah,
let's take it from there.
I don't want to overlook that point that you just made about like the high financing for new investors, because essentially if you have a monster or a fantastic deal, then that supersedes your experience. Is that right?
Absolutely.
Okay, so there's a lot of people that don't get started because they can't get the funds for that deal. Now, but the reality is if they put in enough work and they find the right deal, then it makes funding a deal a lot easier, and then they're gonna have to put a lot less money in to get that deal done. Is that right?
Yes.
Okay.
Because overall, we are 100% asset-based at the end of the day. You know, experience is helpful. FICOs are helpful. You know, reserves are helpful. All of that's super helpful. But if we see a home in Beverly Hills going on sale for $500,000, and we know without even doing any work to it, it's worth $1 million, then great. Any hard money lender would be dumb to not finance that at 100% financing.
Yeah. And, you know, I've been there too, guys, where, I mean, fortunately, after you're doing enough deals, like you get these no-brainer deals, like literally, like just call the lender. I know I have no problem funding this deal because it has enough margin. I'm buying it at deep enough discount. Like funding the deal is the least of my problems. It's just like who can get this thing done at the most competitive rates and the most, you know, best terms, and I just move forward. But I was not thinking about having a hard time, and it turned out that way. So just put in the work, you guys. Eventually, you get deals that make sense, and they're much easier to fund, and therefore it's going to move you forward. And then you will build that track record with that lender of getting good deals. And then they're maybe even likely after you execute that one to fund other deals at a higher percentage because you already got this monster deal. Once you get the other one, that's another base hit. That's going to be easy to fund too. So it just all compounds, you guys.
Right. It's a lot easier, like that I've said before, you know, after doing your first one, you gain the experience and knowledge and wisdom. And it's not like being scared anymore. It's like, oh, okay, this becomes, I've done this before. Analysis paralysis all really goes in. So we're going to ask a couple more questions and we'll move along. From Edward, as a hard money lender, how do you handle a situation where multiple investors are bidding on the same property?
Oh gosh, I have had that before where I've actually written a letter for like multiple people. And then the listing agents called me and they're like, hey, I have like 3 clients that submitted your letter with your letterhead on here. And I'm like, uh-oh. So, you know, at the end of the day, it really comes down to their approach with the listing agent, right? I know what I can offer, at least on the loan side, whatever agreement I have with that particular client. But it always comes down to your specific approach as the investor, you know, the borrower, how you're going to approach that with the listing agent and the seller, right? And I can tell you this, most of my clients who get their offer accepted or something, is it always who bids the most money? Of course, in a sense, right? How much money they can net. But also, are you looking out for the seller, right? Are you looking out for the seller's best interest, especially if it's an older person? Like Alex and his partner were super, super thoughtful when it came to that La Mirada deal. And you guys were really like, okay, let them have time to move out, right? And things of that sort. And we all structured the deal around their moving date. So, yeah.
Great question coming in from Eddie Espinoza here, Natalie. He's wondering, is there a different hard money criteria between a vacant land development versus a rehab?
Vacant land is a whole different animal. And I'm happy to go over, like come back on here and go over from land to construction, because I feel like that has to be its own element of a webinar. And I can give you guys a flyer towards the end, if that's helpful, just to kind of show what we go up to in terms of vacant land and how to roll that over into construction loan. But yeah, there's a lot more detailed questions, like are there entitlements, plans, permits, architectural work being done, you know, all the above.
And guys, Natalie is going to provide her contact information after this. So, you know, we will make sure that you guys can get in touch with her via Instagram or cell phone, or shoot her over an email. That way, if you guys do have any kind of specific questions, you know, you are able to kind of jump on and get some of those specific answers directly from her. We do have a great question though coming in from AJ. He's just wondering about the difference between a rehab construction loan versus a hard money loan, and when you should use that as an investor. What's the difference there?
So rehab, again, is something that's always going to be required, because the whole point of a hard money loan or a hard money investment is really to find a property, fix it up, and make it beautiful, right? So it depends on the level of rehab needed. And, you know, we call it a lipstick fixer, right? A cosmetic fixer. When it's small, when it's something like, oh man, I think Alex has told me that before, where he's like, oh man, I just needs couple new windows, paint, some doors, really easy, maybe 15, 20K. So that would be, I mean, does it make sense to pay the interest rate and the fees on 15 to 20,000? Maybe not, right? So that would be something where you probably don't want to use it. If it's 125,000, then you might start thinking, do I have that money? Or can I borrow that money? How much will it cost me to borrow the additional 125,000, right? And so that's my recommendation when it comes to the rehab, is to really evaluate it.
Awesome. I know we have another great question coming in here from Dante. And he's, again, just kind of asking on this experience question, specifically with the experience clause. Like, if you're a buy and hold investor and you're deciding to do some flips, you know, and you want to get into flips like Alex, is that experience that you have doing buy and holds, if you've had to do work and construction and rehab on those projects, but you're just holding them, does that, you know, count anything, or does that provide you any weight?
Yeah, absolutely. So at least with the investors and partners that I have in place, a buy and hold, you know, I know clients that have made that have bought homes that are needed rehab, right? And they had to fix it up. And so that's a buy and hold in a sense. Appreciation over time, just in good areas. Everything that can always show good reserves, good experience, good assets, I would say definitely can be utilized as experience per se. Definitely.
Yeah.
And Alex, you even had that, right? Like, look, man, like you did 80 deals with another investor. And so you had to take that experience and go to a hard money lender at one point and be like, look, I've never done this myself, but I've done like nearly 100 deals with other people. So I understand the process. I have that experience and I can show you that experience. So I think that's important as well, as how well you can show the experience.
Yeah. So it's experience, but because a hard money lender, what they do oftentimes, they want to see that your name was on the title of the property. And when you're working in acquisitions for somebody else that is actually buying the property, such as my position, for my first, was the first 60 deals or so that I did were for other investors that I found for them. And so I wasn't on title of that property, but I'm the one that found the deal or created the deal, right? So that is experience, but some lenders can use that as experience and others cannot because of their guidelines. And that's where somebody like a Natalie is helpful, because she can go to bat for you and say, hey, this person has relevant experience. In lending, it's called compensating factors as well, or that is a term that's used to describe factors that can help offset the kind of traditional guideline for that particular loan. And so I think that's important that people understand that it's not going to be that easy. And sometimes does make sense to either do a joint venture so you can get the investor's experience and you can get that deal done. Other times, if you have a great enough deal, you can kind of fund it on your own. But also that was a challenge for me. And I'm glad I found Natalie, because I had several lenders that said, no, like that's, even though you've done, I don't care how many deals you've done for other investors, if you weren't on title, then we don't give you credit. You're still a brand new investor. And so it was frustrating. I'm not going to lie, because I had great deals. I had experience. I had cash in the bank to do these deals on my own. And then people didn't want to lend me the money. And then the first couple of deals that I started with were with Natalie, because she was able to go to bat and find me funding for those deals.
Absolutely.
That's great. I love to hear that. And it really just like reconciles with myself as well. Being able to work with Alex and having that, I'd say, net of, doing flips and deals with him and having that experience to, potentially like JV and invest on these flips, because not having the experience in the lending, I mean, it's scary to do these by yourself. And, like doing a house, like there's a potential of losing hundreds of thousands of dollars. So I definitely recommend people on doing that as well. If you're a first time investor, or if you're not, experienced in this ballpark. Got another question from Nathan though. Does Natalie or other lending partners you work with do equity deals? Can you hear me?
Do you do equity deals, Natalie?
In terms, I want to make sure I'm understanding it correctly. So,
I think they're maybe asking if you would do a deal where you take a little bit of the equity in exchange.
Oh, yeah. I mean, I don't personally just yet. I'm actually working on raising my own capital myself as well and building our own fund. but I have partners that absolutely do that. They'll do it for 25, 30% or something like that, right? And again, partnerships, you know, once I always tell everyone it's about earning your stripes in this. Nothing ever comes easy, whatever we do with our career, right? Whatever we do in life. So, you know, in a sense, somebody's like, oh, well, I'll only do it. He's asking for too much. I'm like, is he? Because he's going to give 100% financing, right? I've had clients that have complained about paying 3% origination for 100% financing. I'm like, that's really nothing becoming with them taking all the risk. So yes, they will do equity-based lending. JV partnerships is what they usually do call it on a formal note. But yes, they will do it.
Okay. And we will also do it on our end. You know, again, like Alex and us, we JV on deals all the time where you bring a deal to us, you know, we will give you back that equity position and we will take care of the funding, the rehab and all of that kind of stuff with you. So that those are always options for you as well.
Yeah. We got another one from Carlos. He said, when vetting a hard money loan, most of the time, hard money loan is vetting the investor. What is important to the hard money lender when working with a new investor besides finding a great deal?
I think you mentioned it earlier, Natalie. It's like 3 big things, right? The deal, the price, the term, like those, that's kind of your big ones, right? Like,
well, as a borrower, we still pay attention to you a little bit, right? I mean, at least the guys I work with, there's a lot of loan to own out there. Just keep in mind, again, not only are there fake, you know, false advertisements out there where there's guys on Craigslist taking advantage of people looking for opportunities and putting up fake websites and scamming, right? But there's a lot of loan to own out there. And I remember I met this guy at a conference and he was like, oh yeah, send me some stuff. Because I'm always looking for properties that I want to like eventually live in. I was like, wait, what? And he's like, yeah, I buy them. I know they're probably going to default and then I take over. So I was like, I had never heard of that. Right. And so these are actual investors that exist out there and they purposely want to see somebody default so that they can take over. Most of the people I work with, I mean, I would say, I don't know anyone who's loan to own at this point, but everybody I work with is a good guy, at least on my side. So what they really want to just see is making sure that, number one, you can take on something of this caliber, right? Whatever purchase power, monthly payment that you're going to look into. And again, the background check is super important on our side because we want to make sure that there's not a bunch of foreclosures, not a bunch of judgments, liens, you know, just things that we pay attention to. We're not credit driven so much because things happen in life, but we are background check driven for sure. And no straw buyers. My investors freak out over straw buyers, obviously. So.
Awesome, Natalie. We obviously appreciate your time and you know all the insight and information that you've been giving everybody today. I know we're going to get your information out so that people can get in touch with you. We did just have one more question that I'm going to ask on behalf of Amari, and then we're going to go ahead and welcome everybody back into the room to kind of hang out real quick before we say goodbye. But application fee, processing fee, underwriting fee, appraisal fee. Seems like there's a lot of fees when you do lending. You know, tell us about the fees. Like, what's a real fee? What should we expect? What should we know about? What do we need to know when we're looking at fees? Amari is wondering that, and I think it's a great question.
Absolutely. So my job, just so you guys know, is when I work with somebody, I try to cut out as many junk fees as possible. In fact, I try to loop it, just basically put it all into one fee if I can. The investors I work with do a really good job about that, where we just know, and I basically tell them like, what is it overall? Is it $22,000, which I think is pretty fair because at the end of the day, it's not just the investor that collects that. There is a processor. I have an assistant, right? I have to pay her. They have to pay their assistant. There's legal fees that they have to pay to make sure that the docs are written up, that they're done correctly, right? So it is important that you guys understand that, you know, these people call them junk fees all the time. You know, sure, some of them can be, but I think for the most part, they're pretty accurate. So at least on our side, I always try to keep it at $2,500, and that includes our valuation fee. If you're coming through a referral from Alex, though, we can go ahead and work something out because I did do for the month of March, which was my birthday month. I did do waived BPOs, which is the broker priced opinion, because we don't even really do appraisals. So what we do is the desktop valuation and just send someone out there to take a photo of the home. So those are usually $250, and I've been waiving them. So if you are, I'll go ahead and honor that. through this Ask Alex platform. So if you guys are a referral from Ask Alex, I'll waive that fee for you guys.
Yeah, and I think there's another point real quick I want to make on that is that you know, lenders are going to have fees, you guys. You just don't want them to be excessive. They should be like normal for like the type of loan that you're doing. And then you do, I mean, I want my lenders to make money. I just don't want them to be, you know, egregious with it, where it's like, okay, this is excessive. I don't like this. I could tell that their fees are too high. So just pay close attention to it. But, you know, lenders do need to make money so they continue to help you make money.
There's a saying that my dad always says, and it's okay to be a pig, but hogs get slaughtered, right? And so that's honestly where I start picking up a lot of business because it's true. There's a lot of people, there's a lot of lenders out there where they get too used to it. All of a sudden it starts at $19.95, then it goes to $2,500, then it's $35, then it's $5,000, right? And it gets ridiculous. Alex knows my fees are always the same. They're always the same presented, right? Unless it's a different platform, then it might be slightly different.
And again, the fees are just there so that you can you have to make your money. You have to, you know, operate a business. And so I love what Alex said there. Again, you don't want it to be egregious, but they do have to make sense. And, you know, you have to make sure that your lender makes some money as well. So Alex, do you have any kind of closing thoughts on hard money? Natalie, any kind of closing thoughts here before we welcome the rest of the gang onto the screen and kind of hang out with everybody for a couple minutes here before we head out?
Ladies first.
Yeah, I would just say the most important part, at least on my side, I always look at it from working backwards. So the most important side, important note that I'm going to leave with is look at the exit strategy. If you're truly trying to buy and hold it, let me know. If you're trying to sell it, if you're trying to wholesale it, whatever it may be, because at the end of the day, the exit strategy is the most important part of every deal. Definitely.
Perfect. I know I could go on for another 30 minutes asking some questions with everyone. Apologies for some that we didn't. If we are bringing everyone, if you have a couple more minutes, some people, if your questions didn't get answered, maybe we can come forward and ask them now. Thank you again, Natalie, so much for joining in today.
Of course. Thank you.
Yeah, thanks again, Natalie, for joining us. I just want to say it's been a pleasure to work with you. I love our conversations. Every time we speak over the phone, I just feel like I've learned something new, or there's something else that I need to, you know, consider. Recently, you mentioned to me that you've seen people doing ADUs a lot faster. So again, I appreciate that insight, those golden nuggets that I could continue to, you know, expand my investor tool belt. And that's kind of what we're trying to do this year with trying to do some ADUs as well. So thank you for all the knowledge and just being a fantastic, you know, money partner in my business.
Absolutely.
Yeah, it's perfect. And then Natalie did mention I can put your contact information if you wanted prefer email or if you want to type it yourself. Some people can reach out to you. Okay, great. You guys, you know, and Alex is bringing Natalie forward here as well. So just goes to show it's, you know, vibe of the tribe, and she is amazing for doing this, and she is happy to answer questions, comments, concerns if you prefer to reach out to her as well.
I see a lot of familiar faces and a lot of people that are in Hawaii, a lot of people that are in SoCal. What's up, everybody?
A lot of faces that were at the meetup on Monday. It's good to see everybody in here. I see a lot of familiar faces that I recognize from seeing in person.
Great to see everybody. I mean, I would call everybody out, but there's too many now. I'm sorry.
Perfect. So she did put it here, nrb@buenoandcompany.com, and her mobile is there as well. And Emily did ask, Emily, hello. She did, how does a hard money loan help with wholesaling? We can ask another question.
Can you know, I have that. Actually, can I ask a question? How does the assignment fee for a wholesaler affected by hard money? Because I have a nightmare story about that, but can you elaborate how that's relevant? You know, when you're a wholesaler, you lock up a deal, and then your buyer that's actually the investor, they're getting a hard money loan. How is that treated?
So you have to be very careful with that, because not every lender is going to pay the wholesale fee through the escrow. And in our case, I know for the La Mirada deal, we were able to do that, right? We were able to roll it into the loan amount. So it's not always, it depends on the actual lender, because a lot of them, I will tell you, the ones that are tied to Goldman Sachs and, you know, Morgan Stanley, which is my old company that I used to work for, they will not be tying that in there. Okay. They will absolutely say, no, you need to pay that outside of escrow. But, you know, with my direct private guys, they're like, whatever. That's very common.
Yeah, so I wanted to share a quick story about that because I had this property under contract that had a huge margin, and then I typically don't wholesale guys because I do like flipping the properties, and then I just feel there's a little bit more money, and I like learning more about rehab. But this particular property got such a great deal on it, and the guy that helped me get the deal, he wanted to wholesale it, so I said, let's do it. We tried to wholesale it, but because the hard money lender for the buyer didn't want to fund our assignment fee, we ended up having to take the deal down ourselves because so just keep that in mind. If you are wholesaling a deal, the buyer is, if they're going to get financing, they might have to put more money in the pot because the assignment fee is a buyer fee. So the investor that is taking the deal down is going to have to put their down payment if the lender is asking for that, you know, a down payment, and have to pay your assignment fee. And if it's a monster fee, it's going to be like, okay, that's where it's going to be an issue because they're gonna be putting more cash to the table. Therefore, you know, the return on that cash is going to need to be greater. It might not work, and that will happen with us. So just keep that in mind, guys. The assignment fee is important, especially if the investor is getting a hard money loan. Like Natalie said, some lenders won't wrap it into the loan, so they'll require the investor to pay you that fee through escrow out of their cash, and that might blow up the deal like it did with me.
Yeah, I see it happen actually quite often. So if you guys do, if you're involved on the wholesale side, or you know that a wholesale fee and acquisition price should be paid out, let me know what that fee is. And then the escrow officer also has to be comfortable with that as well. So it's not even just the lender that has to be comfortable with it, but it's escrow and title too. So it's making sure that everybody on the team is aware of it and that they're all comfortable with that.
Right. Great. Any other questions, you guys, for Natalie?
Anything else they want to, oh, sorry, Alex. Yeah, if anybody has anything else they want to say, please feel free to chime in. Again, I think it was very well received today, Natalie. I think everybody was, just blown away. I think we had a ton of questions coming into the Q&A, and hopefully everybody got a ton of answers. You guys have her contact information. She's over there on my screen. I don't know where she is on yours, but you have Natalie's information. Obviously, you have Jay, Alex, and mine's. If you do need anything, feel free to be active in that Facebook group. We just hit 100 people in the Facebook group, which is incredible. That just happened today. So that's 100 people like you guys that are in the tribe, that are out there getting better every day at real estate investing. And we couldn't be more happier to be a part of the journey with you guys. So thanks so much for tuning in today with us.
I'd just like to comment on one more thing, guys. It's not very common for somebody like Alex to be sharing his nuggets and his, what he's seen in the business. So he's one of the good guys. You can really trust somebody like Alex where they're looking out for you. If you're a first-time investor, a wholesaler, or whatever, same thing, like your tribe is your vibe, right? You guys keep mentioning that. And that's the same way I am with my clients too. So, I think you guys are in good hands, especially with asking this. But yeah, I don't see many of a lot of my clients are good guys too. I shouldn't say that, but there's a lot of them that are like, I don't want to tell anyone about this. I want to keep this all to myself. I don't want anyone to learn how to flip. Right. And that's not really the best way to look at things. So again, super, super great to have somebody like Alex share the wealth, share the experience and the losses too. He's upfront about that stuff. So I really love that because he's very honest and upfront.
The wins and the losses, guys. It's a little bit of everything, but at the end of the day, you guys, there's opportunities out there. Just got to work with the right people, put in the work, and we can all grow together. So if nobody has anything else to add or ask, I think we're wrapping things up.
And guys, if you don't mind, like Natalie said, I couldn't agree more. I think Alex is incredible the way that he just continues to open up his books and continue to show you guys things. If you don't mind, just give us a real quick 2 thumbs up. If you guys have your camera on, if you guys have been seeing a lot of value so far through this webinar. Again, guys, the reason we keep doing it, AJ, is for people like you. If you keep showing up, we're going to keep doing it. So next week, I think we're going to do something that you guys really enjoyed last time, which was Alex Camacho getting live on the telephone. So we are going to be live dialing. We're going to be talking to sellers. You guys are going to hear how he engages, what that conversation sounds like. Script. Who has a script, man? We don't have a script. It's straight off the top of your head with Mr. Camacho. So I think he's really excited to get on with you guys here next week.
We have the same. We're trying to turn a cold call into a warm sale. Let's go.
Let's go.
Guys, again, thanks so much for coming. We'll see you guys next week, all right?
Yes, happy early April 1st. It's the end of the March.
Thank you.
Jesus, yes, we do owner occupied, but you can contact me directly for that.
You heard it there first, guys. They do owner occupied. They do just about anything. If you need anything loan related, talk to Natalie over here. She's a good one, and I'm sure she's more than happy to even guide you with questions if you guys need help getting to that finish line. You don't have to be there yet. She can help you get there.
100%. Thanks everyone for having me. Hope it was helpful, and hope to be here again.
We'll see you soon, Natalie. Thanks so much. And thank you everybody for tuning in.
Bye, everyone.
Thank you, everyone. Have a good rest
Thanks,
of the week.
Will and Jane.
See you.
Hey, we'll see you, Ulysses. Appreciate you, my man.
Thank you, guys.
That's good.
Thank you.
Mahalo.